Hi, everyone. My name is Bernard Cooper. I am a NEXTNiagara Council member and financial advisor at Edward Jones. As your moderator for this event, I'm happy to welcome you to Real Talk, Money Matters, a topic I am very passionate about. The Real Talk series is presented by NEXTNiagara in association with the Niagara Region Anti-Racism Association, the NRA, and is sponsored by the YMCA of Niagara. NEXTNiagara is a GNCC advisory council committed to representing and amplifying the voice of young professionals in Niagara. Visit @NEXTNiagara on social media to learn more. I'd like to invite Arthur from the NRA to say a few words about the association and to give our land acknowledgement.
Thank you, Bernard. My name is Arthur Shabar, and I'm a member of the Niagara Region Anti-Racism Association, and I'm happy to welcome everybody to Real Talk this afternoon. Like Bernard said, the Real Talk is presented by the Niagara Region Anti-Racism Association and Niagara Next, and sponsored by YMCA. Niagara Region Anti-Racism Association was founded in summer of 2018 on the principles that anti-racism work should be BIPOC-led, along with partners from the community. We help individuals who are experiencing racism on an individual basis, but also we launch campaigns. Currently, we have we're doing a letter campaign to the regional council to have them shift the money allocated for policing to increase the mental health that's needed in the region. So instead of all the emergency calls going to the police, we suggest that EMS should be involved in that too. So we want the regional council to reevaluate their budget and take appropriate action so that people who are experiencing mental health can get appropriate help. I'm going to put a link on the chat box in a few minutes to let you know about this letter writing campaign and ask for you to get involved with that and perhaps help us increase the number of people that signed that letter. So before we begin, let's acknowledge that the land in which we gather is the traditional territory of Anishinaabe, Haudenosaunee, and Hatiwanda-Ronk people. We recognize and deeply appreciate their historic and continued connection to this place. We also recognize the contribution of Métis, Inuit, and other indigenous peoples, both in shaping and strengthening this region in particular, and in our province and our country as a whole. Having said that, I'm going to pass things back to Bernard Cooper, who's moderating today. Thank you.
Thank you, Arthur. It was great to have you here. The session would not be possible today without the support of YMCA Niagara Employment Services. I would like to shout out Deanna, who's not here, but I would like to shout them out for your continued support and thank you for all that you do. Now, before we move on to our talk today, I want to frame this discussion as an honest, entry-level conversation with questions geared towards young professionals under 40. Mindful that there are some large challenges we are facing in our generation, challenges that are exacerbated for women, people of color, and other marginalized communities. We are going to approach this difficult conversation by providing some tangible information that is not stop eating your avocado toast or stop buying that latte every day. We want to introduce this topic to you as accessible and to keep answers intersectional within the limited time we have today. I have prepared a list of questions based on my experience and included questions from the audience as well. With that in mind, I would like to introduce our speakers. Siobhan Deary, who's a senior financial advisor at Scotiabank, and Nkiru Ngobo, who is a personal financial advisor at RBC. Hello, Siobhan and Nkiru. Thank you for joining us today. Let's begin with some introductions. Siobhan, tell us a little bit about yourself and your practice, and then followed by Nkiru.
Yeah, so as you said, my name's Siobhan. I'm currently a senior financial advisor at Scotiabank. I started working in finance a few years ago at an independent brokerage. So I'm used to full financial planning and wealth management. So transitioning to banking, I now have a little more experience in lending and mortgages as well. So that's something that I do on a daily basis now. And at Scotia, I've been here for about a year now, so we're feeling settled and we're feeling good. So yeah, things are going.
That is awesome.
Hi, my name is Nkiru, and I am a certified financial planner with RBC. I've been in the industry for over 35, 40 years now. I've been in many different areas of banking. But for me, financial planning, to me, I think is my niche area. I love the client interaction. Every person is different. Every person is a puzzle that I have to kind of, think things through and collaboratively discuss with. So to me, it's always challenging for me. And I think this is why I've been in this specific area of the bank the longest. I have a clientele of, I have a client book, which I currently manage. I typically focus on the mass affluent with RBC. And we offer more holistic financial planning. So we deal with all different areas: tax, lending, investment, risk management, and so on and so forth. It's a very holistic platform. And I'm really proud of what that platform has been able to achieve with our clients.
That is awesome. Thank you both. And I am happy to have you guys here. And Nkiru, we'll start with you when we start the questions. How do people facing equity barriers, when they feel that there is no positive way forward financially, how can they get that how can they gain that financial stability? What would be a recommended first step?
A great question. I mean, as a minority myself, finances are top and center, especially if you're coming into an economy or coming into a country new. It's always something that you worry about or question. For me, the bridge of the wealth gap can only happen if you bridge the financial literacy gap. You have to understand what's out there. You have to not only research your own personal situation and understand the economic foundations of it, but also the systems, structures, and products that are out there to support you. So it's really about understanding your situation, understanding what's out there to support you. Now, I have to reiterate that the governments and the different governments, in terms of different levels of government, they have an invested interest in you unlocking your economic potential. They have an invested interest in doing that. So there are products out there, there are structures out there, there are systems out there to ensure that you do that. A productive individual is a blessing to their economy, so don't think you're here alone. They team up with banks and different institutions to ensure that you get the appropriate support. So the first thing is understand your situation and research what is out there. I mean, I just went on to some of the government websites, and there are a lot of things currently out there targeting minorities and targeting people of color. The racialized Indigenous support for entrepreneurs, the Black Entrepreneurship Loan Fund, Futurepreneur, that targets people under 40, young entrepreneurs under 40. The Summer Company Program actually targets young students that are are on summer break, want to start up a business. Like there are things out there that you need to just research. And if you don't ask, what is out there to support me? What is my current situation? And definitely that would be the first step I would definitely take.
Siobhan, piggybacking off of that, how would, if you had someone new coming into your office, how would you get them comfortable and explain what's all available to them? How would you make them feel that they're not left out there alone? Essentially, how would you wrap your arms around them, if you will?
I think for me, and I think all institutions do it, I try to connect with them personally. And I think that's key for everyone. And if you're a minority, if you're a woman, if you're young, you know, it's important to connect because everybody's a human being in themselves. And I always tell them to come to an institution, come prepared about about your own personal situation. Understand your cash flow, understand how much you make and what goes out, understand what you owe and what you own. You know, you have those fundamentals with you and come prepared. You will get the best out of that interview, out of that relationship if you come prepared. So to me is connecting, making sure I let them know that they should come prepared with a full understanding of their own situation, and then you can get the best out of the relationship or the interview.
Perfect. Thank you, Nkiru. Siobhan, when you look at, based off of what Nkiru just talked about, when you look at retirement, and that is a big word that's tossed around in our industry with us dealing with investments for as long as we have, and us as millennials, that seems so far away. What type of conversations do you have with your clients, and what advice would you give to the people that's watching today on how they can start preparing for retirement, what that looks like, and what things they need to put in place?
Yeah, so when people come in and the focus is retirement, we always look at what other goals they have, right? So you have retirement as a goal, and I think it's safe to say that pretty much everyone has retirement as a goal, whether it's coming soon or if it's several years away. But like prioritizing yourself and looking at where you are in life, we're looking at the life stage, we're looking at your career, and you know what's going on. As Nkiru said, cash flows is really important, and understanding your own situation. And if you have questions, I think that's completely fine. Like, not everybody has a lot of in-depth financial knowledge. It's not something that's taught in school. If you're coming from other countries, or maybe you had, you know, family or partners who did a lot of these things for you, it's okay to not fully understand your finances and not understand the products that are available to you. Coming into your appointment as prepared as you can be, and we can go through everything together, right? And so as a young person, retirement can seem really, really far away, but it is something to think about, right? It just makes it easier for you when you start younger than it does when it's closer. It makes it's easier on yourself and your finances and on your wallet, right? So when we're looking at retirement for people, it's really about what the goal is. It's making sure that we can reach that, but reach your other goals as well. Are you starting out? Are we looking at an emergency fund? Are you starting a family? Are you starting a business? And making sure that you can prioritize those things as well, but also have something tucked away for retirement to build off of long-term too. So, I mean, it looks different for everybody, but coming in as prepared as you can be, and we go from there.
I really like what you said when it comes to preparation. And one of the things that I see on a daily basis is a lot of people, they're not usually prepared for that appointment. Essentially, they come in and it's like a one-size-fit-all type of a thing. So let's kind of unpeel those layers for a second, if you don't mind, Siobhan. Let's look at preparation. What would someone who is early 30s, or someone who just essentially just recently got a new job, and they got all these pension documents, what does that look like? What does that preparation look like for when they're coming to see you for an appointment?
Yeah, so when you're coming in for an appointment, we usually ask you to bring those statements. So come know how much money you make every year, which is a big one. Do you make a salary? Are you working hourly? We can try to project how much that will be at the end of the year, but understanding that we're looking at how much money you're spending. So are you renting? Do you have a mortgage? How much is that payment? Do you have any student loans, any debts? What are they? So we would be looking at all of those things, looking at how much money you make. And if you have a benefit booklet through work, or if you have a pension or anything, bring those documents with you. A lot of the times it is a lot of information. It's confusing. There's different pensions for different companies. They're all set up differently. So we can go through all of those things, and then we would go and look at what your goals are, like I said before, and just move through each stage and figure everything out, right? Sometimes you can choose what investments your pension goes into. You'll receive a list. We go through all of that with you. So the main thing is, if you have paperwork, just bring it all to your appointment.
That's perfect. And a lot of times most people don't do that and has them behind the 8 ball. So I do appreciate that. In Kiru, one big word that's been tossed around, especially over the past year, is inflation. What inflation is, what does that look like? Inflation is now driving up the price of eggs, or driving up the price of rent, or I can't buy a house now because the house that I would have bought in 2016 for 250,000 is now 400,000. How do you educate your clients on how to deal with inflation, and what sort of steps do you put in place for them to be able to navigate something like inflation, especially when it's as high as it is right now?
Yeah, I mean, we're currently in more of a hyperinflation environment, so it's really up in the forefront. Inflation, just as you said, it just means the rise in goods and services, the rise in prices of goods and services, and it could be caused by different things. Two major causes of inflation is what we call the cost pull, which means that the cost of manufacturing these goods and services is higher, and therefore it's passed on to the consumer. Cost of goods and services, price of goods and services could be like labor, cost of manufacturing these goods and services. The demand pull is another reason for inflation. That's just there's so much demand and little supply, and that also raises cost of goods and services. We've been impacted by both right now, and we are currently in more of a hyperinflation state. I think for anybody, I think the main thing is you have to rely on budgeting even more in an inflationary environment. You have to kind of narrow in and look at your cash flow even more in a hyperinflation environment. So you have to look at what's coming in and what's going out. Okay, am I in a deficit? Am I in a surplus with regard to what's happening right now? How can I increase income? How can I reduce expenses? You really have to zone in on the budget. You have to treat savings as a fixed expense. You have to actually even put away more in an inflationary environment. People always say, how the hell do you do that, right? But I always say income minus savings equals to expenses. You save first, and whatever is left can be disposable income. And that's just like, it's an equation I kind of turn around, because in hyperinflation environment, you have to be able to make sure your savings is consistent. I have a lot of clients that come in when cash flow is tight and say, I have to stop saving to my RSP. I have to stop putting money into my TFSA. And that's when you shouldn't do that. Unfortunately, what you need to look critically at is, where is my money going? What am I spending it on? How can I reduce expenses? Unfortunately, that's the way to look at your budget during this hyperinflationary environment. You also look at your debt. where is my debt now? What's my highest expense in terms of debt? How do I begin to look at paying that down? So there are different facets we need to look at during a hyperinflation, right? But it all stems with you and starts with you. You have to sit down and look critically at your finances going forward.
That is very, very good. And I appreciate that, because it's almost piggybacking off of what Siobhan had said when it comes to really being prepared. And I think so far that's a big key takeaway, is really sitting down with yourselves and really mapping out where you want to go. And Kiru, just going to talk to you for a second about goals. We all have goals that we'd like to achieve. I know here at Edward Jones, that's one of our main focus, is really highlighting clients' goals. What would you say to get someone's mind percolating when it comes to stuff like that, in terms of how to focus more on goals to be able to strategize and to plan? What are your thought process on that?
I think we should all have goals. It's very important. And when we're talking about preparation, in addition to getting documentation and things in place, you have to come in prepared to what your objectives and goals are. It's so key when you're having a discussion with a financial advisor or a financial planner, is what do you want to achieve? And you have to be, your goals should be bucketed, short-term goals and what you want to look at long-term. You should have both those in the back of your minds when you come in for an appointment, or when you're talking to your financial advisor. Once you kind of determine your objectives or your goals, then a plan is set in place. That's not where it stops. A plan is a living document, it's a living live thing that you have to review and monitor consistently. I have a lot of clients who had home ownership as a goal, or buying a rental property as a goal. Now we've had to come back to the table and review that goal and determine whether we need to make changes with respect to that goal, considering the current economy. Remember, a goal deferred is not a goal denied, right? That you're coming back to the table and you're reviewing a set goal does not mean that it's a denied goal. It means that you have, because change is the only thing that is constant. You're changing your own personal situation and the changes in the economy, right? So I think it's important to sit down and come prepared with what do you want to achieve, and it could be very holistic as well. But I think it's important to determine to bucket your goals in terms of time horizons, what I want to achieve short term and what I want to achieve long term.
Thank you, Nkiru. Siobhan, have a question from the audience, and the question is around retirement fund. And so this is where I think all three of us really get excited. What is the best way to maximize money when I put into a retirement fund? And I know we can dig deep when it comes to this and try to keep it as surface level as possible. But what is the best way to maximize the money I put into my retirement fund?
So there's a couple things that I have clients do when they're looking to maximize their retirement fund. I'm going to make the assumption that it's an RRSP, so a registered retirement savings plan, as like a quick surface level explanation of what that is, for people who don't know. It is an account where you put money in for retirement, and say you make $50,000 and you put $5,000 over the course of a year, your taxable income will be $45,000, and then you get the tax return when you do your taxes that year. So how do you maximize that to your benefit? There's a couple things. I always have my clients work with a professional accountant. There's a couple things that you need to know when you're putting money into an account like that. One is how much your contribution room is, because there's an allotted amount that you're allowed to put in. So just making sure that we're within that allotted amount and we're not going over, so you're not penalized in any way. So working with your accountant on that, because everybody's situation is different, right? It's hard for me to just say, this is the answer and go do it and it's fine. A lot of the times it's different for each person. It depends what tax bracket you're in. It depends how much money you make. It depends how much money you're putting into your RSP, right? when you're doing your taxes, what other things are being deducted. So it is very much, yes, your financial advisor is putting money into this account for you, but we work very closely when doing that with accountants. So I think having both of those players involved when trying to maximize is the easiest and most beneficial way to go forward.
That's perfect. And staying with you, Siobhan, everyone always talks about our RSPs and what that's about. In 2009, the government introduced the tax-free savings account, which is the TFSA. If you don't mind giving us a Coles Note version on what the TFSA is and what is the difference between that and the RSP and how we can maximize both.
Yeah, so an RSP and a tax-free savings are both considered registered accounts. A registered account is essentially an account that has some sort of tax advantage. That is compared to then a non-registered account, which does not have a taxable advantage. You would use the non-registered account after you've maximized what you can from the registered ones with the tax benefits, right? So a tax-free savings account is essentially just as it's named, and any money that you put in there is tax-free. So you don't owe any taxes on anything saved or growth within that account. So now it's not deducted from your taxable income like an RSP is, but there's no tax implications coming in or out of the account. The one thing to consider for the tax-free is there is still an allotted amount that you can put into that account. So knowing how much that amount is important. It starts accumulating the amount that you can put in when you're 18. So depending on how old you are will essentially depend on how much money you can put in. So if you were over 18 when the account came out, then you have the full amount. And if you were not, then we would just look at, based on your age, how old you were, how much you can put in.
That's perfect. In Kiru, young professionals are often told the best investments are investment properties. And it's prior to the pandemic and prior to really 2017, buying a second property was always something that was potentially doable. Now it really isn't. How can young professionals redefine what building wealth or financial security looks like when home ownership may not be an option for them? What else can prosper you economically?
Yeah, so like I mentioned before, having a long-term plan can change. I mean, your plan could also be, your time horizon can also change. I think for right now, there are things in place, the government is putting in place to ensure, to help the average person to eventually get into home ownership. Such things like putting in the budget, I heard in the budget there's monies allocated to construction of new homes and all of that. There's also a ban on non-resident purchases for a while. And there's also the first home savings account, which has been launched this year, which is like a merge of the RSP and the TFSA together. It's a fantastic product for first-time home buyers. And all these are things that the governments are putting in place to ensure that this goal you have is not going to be denied to you. But as these things are being leveraged, you have to do your own bit. You have to begin to plan accordingly, saving for a down payment, do your research, understand what's out there, understand your finances and your expenses in order to do plan. Now, I always say to most people, in terms of looking at what to invest in terms of investments, the TFSA is a no-brainer. I think wherever you are, a TFSA is a no-brainer. As long as you're a resident of Canada and you're over 18, I say start there. The reason why is because an RSP might have restrictions in terms of your contribution room, and it may not necessarily make sense if you're a low-income earner. But the TFSA is not necessarily applicable to you. You can put money into your tax-free savings account. And at the end of the year, you can pull it out without any taxes and apply it accordingly, whether you're applying it to paying down debt, whether you're applying it to now put into an RSP because your income has gone up, right? It gives you that option to pivot. And I think it's a fantastic product to begin to put money into, as long as you have the available room. So it's never how much you make, it's always how much you save that determines really your financial future. So you have to begin wherever you are, invest early, invest regularly, invest enough, and have a plan, right? Those are my four concepts of investing. If you align yourself to that, I mean, whether you're building a pool of money to later purchase something down the road, but you still have to begin somewhere.
Thank you. Siobhan, back to you. One question that I had was around education, education within marginalized groups. So, for example, when it comes to if a certain group or even women, for example, may not have the right education or was not taught about the right education as they're growing up, how do you make them feel comfortable in your office in terms of breaking things down for them? And what would you say to them if they're on the Zoom now? How would you approach that with them to be able to have a conversation with them if need be?
Yeah, I think when you are taking the first step towards any sort of financial goal or understanding your own financial situation, it can be I think it's very scary, especially if you didn't talk about money growing up, regardless of what group that you came from. If you did not have the financial education taught to you in school or by your family, or it wasn't something that was top of mind, I think there are a lot of negative emotions that come towards going to the bank and asking questions. I think that there's a lot of fear associated with that. And I think there's a lot of mistrust for people who work in finance and at the banks or other institutions. And I think it's warranted, and I can understand that. We are here to help you, right? And I don't want people to ever feel like they can't ask certain questions, or we talked earlier about being prepared. I don't want people to feel as though they've wasted their time if they don't come with everything that we needed because they didn't know. Like, we're not making fun of you. We're here to help you, right? And if you forgot a form, it's totally fine. And if we need to have several meetings to go over everything to make sure you understand, that's totally fine. It is like we've all created our careers around doing that for people, right? And so I think the fear and the negativity around seeing a financial advisor, I really hope that changes in the future and that it becomes like a safer environment to come in. And I think people do feel that way once they get used to coming and they build a relationship with their advisor and the people that they see. But this first step is totally terrible. Like, it sucks. It's scary. You don't want to come. I know that you don't want to come. It's okay. And if you don't even know what questions you should be asking, or you don't know what you don't know, that's fine. We sit with clients all day, and my entire job and career is around educating people on their finances and helping you. And I enjoy doing that. So I think just understanding that, and then just taking the first step of coming in and speaking to somebody and making sure that you are prioritizing yourself, you are coming in and you are booking the follow-ups. Because it is scary. It might be scary for the first few sessions that you come in for, right? But making sure that you stay on top of it, that you begin to feel comfortable. If you aren't, and there's certain questions, ask the questions. Ask me what you want to know about me to make you feel comfortable. I think everyone is very open and warm, but it definitely is a scary thing to start.
I do appreciate that. And that is That is very, very good information, and I sympathize with that a lot, especially with my time being in the industry. I'm now with Edward Jones, and there's a lot of people when they first come in, they don't know anything, and they feel embarrassed. And there's no need to feel embarrassed, because this is why we're here. And unfortunately, there have been some bad apples within the industry, but we are here to really say we're here for you from that standpoint. There is question, and both, I would like both Nkiru and Siobhan to answer this question. Is there a cost to working with a financial advisor? Now, before you guys answer that question, for someone like myself who works for a brokerage, yes, there is a cost. But that's something that if anyone would like to work with me in the future, we can take that conversation offline. But I'll have Nkiru answer the question, and then Siobhan, I'll have you answer the same question after her.
Yeah, thanks. So it does depend on the institution. For most banks, I would say the financial planning platform does not come at a cost. It's free, and basically what we believe that certain clients do require certain attention and some more one-on-one. So we do not charge a fee for financial planning. However, also just to add, we are not either commissioned, and that is also intentional, because we want to make sure that when we're sitting in front of a client, we're only focused on that client. There's no discretion involved in terms of what our remuneration or what our compensation is, and that we are positioning products that are right for that client and not swayed by compensation. So there's no cost to financial planning for us, and we are on a strict salary. We're not compensated based on what product you do take up with RBC or not.
So similarly at Scotia, there's no cost to see anyone in the offices that I work at. I have come from a brokerage as well, as we briefly discussed in the get to know me in the beginning, where you are charged for meetings. So I have seen both sides of it. Normally, from where I was at the brokerage, an introductory meeting to get to know the person is normally free of charge. I think when you're starting off with an advisor, it's important to I would say shop around a little bit, because you are going to be working with this person long time. It's like a family doctor or a therapist. You might not mesh with the very first person that you see. And so I think that's fine. And so having introductory meetings, getting to know the person, seeing if they, are on the same page as you, have the same goals and priorities, if they can take you on as a client. Like she had said, most banks don't charge for financial advice. So it's something to keep in mind. It's sometimes a good starting place. And then based on what your needs are moving forward, going to someone who charges a fee, you do get more attention. Absolutely.
And
I just wanted to add to that. I also want to let people know that there's also so much resources out there that are also free as well, right? Yes. You can actually, I think there's a government website as well where you can actually go for training and mentoring, right? If you're looking at setting up a business or something like that, and you need somebody to kind of take you to the loops from a non-finance aspect of it, just understanding, how to get things started. There are definitely resources out there that you can get to free, totally free. There's funding out there to support your businesses or to support what you want to get done. Again, totally free. There are grant writers out there that can help you get grants, that help you set up, write grants to the government, totally free. So these are best kept secrets that unfortunately you have to ask a couple of questions and find out. but the resources that are out there are there to support you. You know, our community, our governments, our institutions are invested in you succeeding and doing well. So reach out and get the help that you need.
That's perfect. And I'm loving this conversation because it really proves my point that it's so much to jam within 1 hour. And that's why, taking back, we're probably going to look at either sending out some terminology of things, as well as some piggybacking off of those websites that you talk about in Kiru. Siobhan, you had mentioned, and I thought it was really great that you had mentioned, and it's something that I advise people as well, is the bank is usually the best place to start. Reason being is because you get the attention of advisors there, and they will essentially meet you where you're at, and the information and the knowledge is free. Coming to someone like myself, any appointment is essentially free. You're not paying me at all for any sort of appointment. Is where things tend to happen is when we start investing, and what does that look like? But a question for you, Siobhan, a question from one of the people that's on: how do we invest as young professionals when the increase in living costs has not been matched in terms of wages or salaries? Starting salaries nowadays start below the amount required to live. Waiting for salary increases is sometimes could take years. Do we expect to see better days after this recession? It's a great question.
Yeah, so they absolutely, entry-level jobs, I think, start significantly low. And I did some research on this before the call, just to make sure like I had my facts right. Entry-level positions haven't increased the wages. It hasn't increased in about 20 to 25 years. So in the early 2000s, people coming out of university were making the same amount as people coming out of university today, which is insane. I think one thing that people can do, and you know, this might be helpful for some and not others, I think you really need to advocate for yourself. You need to be having conversations with people in your industry, how much money they're making, how much money are your colleagues making, what is the industry average, where you work, are you getting paid fairly, are you at a company that is increasing your salary with inflation, is there a good path to promotion where you're at, and like really looking at where you are in your career. And I think having always being active in the job search is important, because you're seeing what skills are available, what skills are needed for the job and career path that you're on. Are other companies paying more? Are you being paid well compared to other companies? And I think that those things are important. And it might not be super helpful to some, but I think continuously looking for those things does help. I've seen people, even friends and other colleagues, realize that they're not being paid as much as the person beside them, and either choosing to leave or maybe getting an offer somewhere else and then saying, hey, I got this offer, I'm leaving, and then it's matched or it's exceeded by the company because they don't want to lose them. And I think those things, although it can be difficult to do, I think making sure that you're being paid fairly is really, really important. Like you really, I think prioritizing yourself in financial literacy, but also in your job and your career is really, really important. And inflation is, as Nick Roos said, it's hyperinflation now, and it's, you know, not, I feel like there's band-aid fixes for people, yes, but it's such like a difficult topic. And you know, I think like those things and making sure that you're being paid fairly is super important.
And staying with you, Siobhan, it's, and I know all three of us here on the panel, we are more investment centric, but I think with you working in the retail bank, this is a great question to ask. What recommendations do you have for young professionals who are preparing to go to the bank to apply for a loan, a credit card, a mortgage, or a line of credit? What counts at the bank when you're going to apply for these things? And how do we prepare? How do we prepare for an appointment like this?
Yeah, so when you're coming in for any type of loan, when you're at the bank, we look at like very specific things. We're looking at your monthly income, so how much you're taking in before tax, and we're looking at what type of loan you're getting. So if you're making say $4,000 a month and you're looking at getting a mortgage, you can go up to 44% of that amount, right? So you have to take out what your other expenses are. Do you have a car loan? Do you have student loans? Do you have a credit card, a line of credit that you're paying? That'll then be reduced from that 44%, right? So that will then dictate how much you can get approved for. Now, there are other things. Having a good credit score counts. Are you applying for a loan with another person, then their things count as well. So it's really comes down to your cash flow. It's based on how much that you are earning versus how much you are able to pay in debt. So it comes down to your capacity. So when you're coming in, having your pay stubs, having a job letter that says how much you make, so we can prove that that's how much you make. And then being aware of what your expenses are important. A credit check will be run. So we normally get the answers we need from that, but coming in, knowing what you make versus how much you can spend is really what it comes down to when you're applying for a loan.
Thank you, Siobhan. Nkiru, what would be your advice on how we can best manage debt? I think at the entry level, when it comes to all three of us, we all have had conversations with our clients in terms of managing debt. And in your experience, what does that look like? What should a young professional be looking at doing when it comes to that?
Yeah, and debt should be managed. It's not the big bad bear. It's like it should be managed. All debt is not equal. And it's important to realize that all debt is not equal. When you're looking at your debt, and that's typically comes across when you're preparing you're doing your homework, you're preparing your net worth statements, what you owe versus what you own. When you're looking at what you owe, you're looking at trying to rank your debt from highest to lowest. Now, in terms of cost, what's the most expensive debt you have? That should be what you should target first. In terms of managing it, is your debt tax deductible, which means that was it used to invest? If that's the case, then it may not rank as high up because there's an advantage of still holding that. Typically, I always say at the top of your list, credit card debt should be a no-no. And credit card debt should be something if you actually are holding because of the cost of it and because of this non-tax deductibility of it, it should be something you're addressing right away, right? You're putting money down on it as much as you can. It's not in your best interest to actually even hold that debt because of the rates are astronomical. But also in looking at debt, it's also good to look at it in terms of risk analysis. How much of that debt is insured? Is there life insurance on any of that debt? Is it covered for disability in case I'm not able to go to work? Do I need to cover it for disability? So there are different focuses you have to look at when you're looking at debt. But first and foremost one is the cost. And you should always address the most expensive debt first. You want to have debt, but you don't want to have debt that is unsurmountable. You don't want your debt to be very close to the limits either. So if you have that's what creditors look at. If you have a lot of debt and you're close to your limits on most of them, that's a warning sign or a red flag that this person's having a problem managing debt, right? So you want to get your debt, far away from the limit as possible by paying it down. People tend to say have a lot of cards and keep them open. I don't really subscribe to that. Managing debt is also controlling how many cards you do have and keeping them, keep the ones that you're not using at all, close them off, and get them away. student debt is also a lot of debt a lot of people do have. I don't know, student debt and housing debt, I find I'm not too onto it, because if it's debt that was used to acquire something, that student loan that you paid 40, 50,000 for, what are you using it for? Did you finish school? Are you applying that degree or your diploma or whatever it is, or that trade, to pay off that debt? If you're not, then what's the point of that student loan? Again, it's also out there. There's so many services available. If you are in trouble about debt, places to go to look at debt in terms of getting some sort of debt consolidation and getting that debt off of you. So it's a big part of planning, and it's a thing that most people tend to want to ignore. But it's important that you critically look at it, because it'll impact your cash flow, which impact your goals, which impact your plan.
Staying on that same topic, do you, a question from one of the attendees, do you believe investing in real estate is beneficial?
I believe in diversifying is a key. That's your best investment strategy, is diversifying. And diversifying in real estate, investing in real estate is diversifying. So I am totally for purchasing real estate. Unfortunately, entry level into that type of investment at the time we are right now is very high, as opposed to putting money into a tax-free savings account. So I do believe investing in real estate is important, because diversification is important. And having all your investments in the market is not ideal either. You should have something outside the market as well. So I do believe it's important. But like I said before, deferring it because of the current situation is not denying it. It's just you're working towards it.
That's correct. Thank you so much, Nkiru. Siobhan, my last question for you, and I think this will essentially put a bow on everything that we've discussed so far. This is one of the questions we got sent in. Any advice on reducing the pressure to do all the right things? So to have an emergency fund, to save for retirement, to save for home ownership. What advice you can give us to sort of reduce that pressure, to make us feel good after we leave this conversation today?
I mean, it's one step at a time. Like, I think I had a mentor always say to me, because even in my career, I was always trying to like do all of the things and like, and he would always be like, how do you eat an elephant? And I would be like, what are you talking about? And then he would be like, one bite at a time. Like, you have to do one thing at a time. Everybody has so many goals for their life, so many things that they want to do and achieve, but you have to look at what your goals are, and you have to prioritize them. What is short term, what is long term, and just one bite at a time. I think the first thing that people can do is have an emergency fund. That's really important. Check. Once you have that done, next thing. Maybe it's having a vacation. You want to do that because you haven't been on it for a while. You save for that. Check next. Having like a goal for retirement is something that you're going to be working towards for the rest of your life, and putting some money towards that every month. Maybe you do it automatically when you get paid, even if it's a small amount. Check, you're doing that thing. Putting money in your tax-free savings. Maybe it's part of your emergency fund. Maybe it's general savings. That's okay. But understanding like what your goals are and what you want to do, you're not going to accomplish them all tomorrow, and that's fine. And I think when you're first starting, like something that people can do to feel good is get your statements together. How much money do you make every month? Do you know how much are you spending every month? Like, those things aren't fun things to do. Like, nobody wants to go home and do a budget for themselves, but that's something that you can do to just start, and then check you've done that thing. There are very small things that you can do to help organize yourself and your finances to move forward. But you have to keep in mind that you're not going to achieve every single goal immediately. They're long-term things, right? So I think that you should feel good and like celebrate the small wins. Like when you have like your emergency funds done, like you should celebrate that and be happy. And like, if you want to go and there's a certain wine that you like, or you want to go for dinner, there's something, a task that you enjoy, go do that thing because you've created your emergency fund, it's done. Like, I think that's important.
Absolutely. In In 30 seconds, what lasting words would you give everyone that's on the call, Siobhan?
Lasting words. I think just understanding that, you know, advisors are here to help you. There's a lot of information available to you online, and don't be afraid to come in and ask questions. It is our job to help you, and we want to do that. So I think, like, people who are listening to this webinar, like, that's something that you've done for yourself, to take a step forward in organizing your finances, and that's great. Like, you actively signed up, you were listening either live or to the recording, and so there's a lot of takeaways. And if you have follow-up questions, like, ask them, send us emails, go to see the advisor that you at your bank or your institution. Like, there are things that you can do, and I think again, like, making sure that yourself, like, you prioritize yourself.
Thank you. Nkiru, 30 seconds, what would be your final words that you would tell everybody?
Yeah, I mean, finances are important. And I think because it's such an emotional thing that people tend to shy away from it, but I think we need to give it its proper place. Ignoring it won't make it go away. Hoping it away won't make it go away. We have to address it. Take out that time to work on yourself, work on your finances. If you don't know where to start, walk into any bank and say, I want to talk to somebody. I want to chat. And that's where it starts. But I think you have to speak to your future self right now and say, I'm going to do the work right now.
Thank you. And I agree with both of you. I think you have said some really key things throughout our time together. And for anyone that's listening to the recording, or anyone that's on the Zoom right now, you can reach out to Nkiru, you can reach out to myself, or even Siobhan, whoever you sort of resonate with. And that's the thing with this business, we all essentially do the exact same thing. But at the end of the day, it's a relationship business. And you want to be, as Siobhan said, you want to be with someone that is going to not only have your best interest in mind, but also someone you connect with. It is like getting a family doctor. It is like going to that dentist that you like, even though you hate going to the dentist, but you enjoy the conversations that you may have with your dentist. I think the dentist is a bad example because I don't think anyone likes talking to the dentist. But that brings our time to a close. Siobhan and Nkiru, thank you so much for lending your expertise on this important topic. Thank you for taking time out of your day to do this. On behalf of NEXTNiagara and the Niagara Region Anti-Racism Association, I'd like to once again thank you all for attending and acknowledge the GNCC, and the YMCA for their sponsorship. Seeking financial education, as I said, can be uncomfortable and difficult to access, especially for marginalized groups. I hope this serves as an empowering introduction or reintroduction of this topic. For those who are ready to learn more about financial literacy, we'll be sending out a post-event email with tips and tricks, common terminology, and resources. If you want to learn more about achieving financial wellness, as I said, please, I recommend you reaching out to Siobhan at Scotiabank, Nkiru at RBC, or myself at Edward Jones. Thank you all, and have yourself a great rest of your day.